Now I want to talk about CGT. Now there's an article that came out today, and I know they've been back and forth. The governments have been back and forth about this CGT discount. Now I want to break this down for the people that don't know, because I know there's a lot of people in here that listen, that have no assets and don't know how it actually works. So in Australia, if you own an asset for more than 12 months, you get a 50% capital gains tax exemption. So if, and this isn't your primary place of residence we're talking about here, okay, guys? We're talking about if you have a business or a property or anything like this that you hold for longer than 12 months. If you bought it for $1 million and it's now $2 million and that thing's went up by $1 million, you get a 50% discount, which means you only pay tax on the 500,000. Now, it's where there's smoke, there's fire. And I know it's just an article and they're talking about it, but when I start looking at these tax reforms, right, it worries me, right? It worries me, one, because I've got assets,
Yeah, and a shitload of
right?
property.
Right. Yeah. But it also worries me because of the knock-on effects, the second, and third order effects, which I want to discuss with you guys on here. But just to give you guys an example, they're talking about if they actually got rid of it, that it would add over $20 billion back into government for tax, right? To pay things, like homelessness as an example, and social housing, and whatever they want to spend.
Increase the handouts to the lower K.
Correct, right? And this is the issue, right? Like, instead of us enabling the lower K, like what we're trying to do, and we're enabling the top of, the above K as well on the top of the K, right? They're not we're trying to help them. They're enabling them by just keeping them in the same position with more handouts, right? And this is the thing, when you travel to countries like Dubai and whatnot, there is no handouts, right? You either work. If you're not working there, they will literally deport you. There's no issues over there. They just send you home. And some people will like that, some people won't like that. But I start thinking about these things and going, okay, we are in a crisis, a housing crisis right now, right? So imagine if they say, you know what? No, this is what's happening. The CGT is gone. What is the incentive for the top K that can afford to invest in business, to invest in assets, to invest in property, as an example, within Australia? There's not much incentive. So what's going to happen, right, when the investors remove themselves from the markets, because they're going, there's no incentive in doing that because I'm just going to be paying full tax on that. That means there's less houses. What does that mean to the supply? Less. What does that mean to the demand? If they still keep the population growth going and the demand happening, what's going to happen to rents, which is usually majority of the lower K, right? Rents are going to go through the roof, as an example. What's the incentive for me or Mark or James or Raf or anybody else? I mean, the incentive is not there for Raf anyways. He's already gone. He's already in Dubai, right?
That was the
What's the
incentive.
incentive? What's the incentive for people? Yeah. What's the incentive for people to invest in the country? There's going to be more and more people that are going to want to invest outside of the country. Mark and I were just on a phone call with a very, very successful woman yesterday going, you know what, guys? She lives in Bali. I don't want to invest in Bali. I definitely don't want to invest in Australia, but I do want to invest in Dubai for multiple reasons. And she's actually been there, right? So this is where I start looking at these things, these CGT tax breaks, and the second and third order consequences are the biggest issue. A lot of people will sit here and say, oh no, but it's, oh, Eric, oh, you're just saying that because you're greedy and you want to make more money through property, as an example. Of course, we all want to make more money, but let me tell you, there's going to be a massive issue if this thing actually gets passed. And I want to know what you guys' opinions are on this.
I mean, I'll just jump in real quick. I think obviously the getting people to actually invest, I think that's going to be like a second order consequence. But I think the third order consequence is that the amount of movement of that asset class is actually going to be stagnated. Because if you're going to sell and the capital, like the discount on the capital gains is gone, that means property already is being held for a very long time for people who already have the capital and the assets. And so what incentive do they have for those that already hold it to actually let it pass through their hands? Because they can't, the amount that they're going to be paying in tax it just doesn't make sense. So they'll hold it as like a long-term investment, like for the rest of their lives. And then they're going to be making money off on the rent side. So that's a downstream negative impact for the lower K anyways. And so that's actually the major concern, because there's already a supply issue on the property side. It's going to change hands even less now because of the benefits that are being removed for the investors that held the property. So it's just like, I don't see the logic, long-term logic. Short-term logic, sure, you get like 20 bill or so to be able to invest in other programs by all means. But it's like, that's just like, what is it? Cutting off your nose to spite your face? That's what it feels like.
I mean, that's the other thing there is, like, you're right, Raph, that they won't sell. They'll just gear out all the equity, and it's completely tax free, and they'll miss it altogether. I mean,
I think the way you've got to look at it, and you have to kind of take a step back and really understand what the game at play is. And when they tease these changes, I never believe that those changes are going to instantly come into play, but I believe that they're starting to test the temperature of things based on demographics. So the majority of the people who own these properties that would sell them and get the capital gains discount would be boomers. Now, there's an argument, we make the argument all the time, or Eric's made the argument, that more properties are going to be held in fewer hands. But that there will come a tipping point where that won't be the case, because what happens when the boomers die and leave the properties to their kids? They sell the properties and they realize the cash, and they don't give a shit if they're getting a capital gains discount or not. They just want to realize the equity and do something else with it. So I believe that they're testing these policies because there will come a time where the boomers will start to hand down those properties, right? And the majority of the largest voting cohort won't have property, and they will eventually vote these type of policies in. Okay. And that's what will happen. So structurally, the argument that more properties will be handed in fewer hands might not actually stand up, because what will happen is those properties will get dispersed, and it could bring the property market down. But you got to remember as well that developers I don't necessarily think developers won't be incentivized to continue to build, because this is not a rule that really affects them, right? They pay trading taxes. They don't pay CGT on their gains anyway. So there's an argument to be made that it could increase supply, and it could actually be good. Short-term bad, but long-term good for a population who doesn't own property. Again, this is another one of those structural shifts that we're going through, and we have to kind of understand the second and third order effects. I don't think it's coming in today, but more and more policies like that affect investors, because it's like in the US, the bondholders, right? The debt holders are getting they're basically getting their assets bled over time, because that's what has to happen, because that's where the bubble is. If the bubble in Australia is in property, you better believe that your assets are going to be bled over time, whether you like it or not. That's why investing in overseas property is becoming all the rage now, because you can get better returns. You're not at the mercy of a government who's trying to tax you, and you're also creating a plan B if you ever need to pick up and go.
I mean, it's like deal. It's like as you said, is a headline to test the waters. I mean, since I've been in property or business, they've took since about 20 odd, is they've always swung this. We're going to repeal negative gearing. It's been on the label more times than not, and it's never changed at all ever. But you've got to then ask yourself, like you said, Mark, when that cohort changes, will that the canary in the coal mine actually then bite? And change actually occurs, but
that's what you got to watch out for, and it's around about 2035 where it really starts to happen. And that's, in my opinion, that's when you're going to see a prolonged bear market in stocks too.
The thing is, like, there's policies that have been put in place that will have massive impact. We're sitting here saying, "Oh yeah, it might probably not happen." The smoke and mirrors. They're just talking about it and the rest of it. It's clickbait. Now it's called rage bait. That's the new thing that my kids tell me. Anyways, but you look at when they introduced GST. Like, imagine the impact. We were too young, but imagine the impact that would have had on the economy. And someone came up with that idea. And then obviously everyone gets used to it, and then it goes from there. But I'm more into like, if they do introduce these policies as an example, is it do they give notice? Do they say, hey guys, now for any people from this date onwards that buy a property or have a business as an example, right? They have no seat, the CGT exemption is gone. Or is it like, how about the people that have been owning property for 30, 40, 50 years, the people that have businesses that started from nothing that are now valued at, $2 million, $5 million, $10 million. Imagine not getting that cut because all of a sudden they've just put this in place.
Yeah, I mean, the article sort of reads, long as we grandfathered for new investments at strike date, but the government recently has been known to change the rules, aka it's taxing self and super.
And it's only one piece of the pie, right? They're not talking about the supply shortages. They're not talking about the planning regulation, the migration policy, the negative gearing, all these other things that have massive effects. So it's one thing, and it'll be interesting to see what happens. But let's put it this way. In my opinion, and everyone that listens to this will probably believe this as well, we're not going to be getting taxed less, right? In my opinion, in the Western world, taxes will only increase. Stop smiling, Raf. All right. You're not in the Western world anymore, mate. You're in Dubai. So, stop feeling sorry for us with all that pity and that smile of yours.